Well, let's turn the spotlight back onto L&T. They delivered a steady quarter. They beat the guidance on the revenue growth and the order inflow for FY24. The company has now guided for 10% order inflow growth in FY25. Mr. R. Shankar Raman, the whole-time director and CFO of L&T, during the conference call, responded to my colleague Vivek Iyer's question on the FY25 order inflows and guidance. Let's listen in.
On top line, since we have had a very large base of orders of almost 3 lakh crore, and considering that maybe 4 or 5 months we might lose out in the government formation, new government, all of that political issues, we have assessed a growth of around 10% in terms of fresh order intake for the FY25. But looking at our order book of 4.75 trillion, we do think that the revenue growth would be around 15% or thereabouts. We do think that the margins that we will report on 15% revenue growth for the core businesses would be around the current levels, which is 8.25 thereabouts.
All right, that's Mr. Raman on the outlook ahead for the year. Let's take this up with Amit Anwani, research analyst at Prabhudas Lilladher. Amit, thanks for joining in. So I think the big question with L&T is whether the market is going to go with absolutely stellar growth at the order book, 30%, and on top of that, they're guiding for 10% next year. Fantastic move on revenues. They've beaten their own guidance. Or will the market remain hung up on the fact that margins are not improving? And this is not a new complaint. This is a long pending issue, where we're hoping that those legacy orders kind of, play out and then the margin profile starts improving. The management is saying may not happen in FY25. What's your thought?
Yeah, thanks, Surabhi. So definitely, I would say on margin, there has been expectations from almost 5 to 6 quarter plus that there should be the ramp up in margin, and continuously we are seeing the infra margins hovering on the similar or trending downward. And obviously, because of the project mix, the legacy execution happening, which was taken during COVID, we did expect it that there should be a margin improvement since there's robust intake which came in from the international orders. But the company did guided that these orders might be again similar or lower with respect to margin to domestic business, but there could be major return on equity improvement which can happen because of the superior working capital terms which they can get in the international markets. So what I believe is obviously there may not be the expectations now that there will be improvement in margin in FY25. But having said that, the way the balance sheet has been managed with 12% working capital to sales this year, and kind of the better guidance for FY25 as well with respect to working capital for the conglomerate like L&T, and working capital is very important aspect in this industry. And on the top of it, on the high base of growth which they have witnessed this year, I think 10% also would be commendable for FY25 with respect to order intake. And what we can gather from the commentary is that this time around, again, the prospects are bright in the Middle East, GCC countries, and there should be ramp up happening in the domestic orders as well in FY25, despite the election year. Oh. So apart from this, I think apart from 15% guidance, I still believe that there would be 14% growth coming in FY26 as well. And maybe FY26 we can see the margin improvement once the mix changes and
sure, Amit.
Projects are completely out. Yeah.
I just wanted to point out that in the pre-open, L&T is the weakest stock on the index. We're flashing the numbers. Let's also flash the stock right now. It's down about 4%, and the market's verdict is clear. The market simply, it's a question of the glass half full or half empty. And for L&T, for whatever reason, the market's latching onto the glass half empty bit. Order book, fantastic. Revenues, great. But it's the margin that the market seems to be completely hung up on. And that was my question. Amit, so what are your own estimates baking in right now? The stock has rallied 40% in the last 1 year. how do current valuations look? And what do you make of the fact that it's just the margin? The market's not even looking at the other positives. Is that how you would also view it? And what's the advice on L&T?
So definitely, since there was an expectation that it was guided that starting Q1, Q2, there would be some stabilization or improvement in margin. So we can expect some near-term immediate reaction. But I think with respect to the order intake, which has been building up, our top line growth assumption is about 14% CAGR. And for the core business margin, despite keeping similar levels, we are assigning 26x multiple. And my SOTP valuation is coming roughly about 4,047. So I think the long-term to medium-term outlook, we can keep it positive on the back of, as I said, this year also the 40% run-up came up because of the major surprise on the intake. Starting from 10-15%, the company delivered 31% growth. And I think they have also pointed out to the strong GCC prospects still panning out in FY25. So I think on the high base, even if 10-12% growth, I think there's a visibility there, despite the near-term impact on margins, which is there in FY25. I think with longer view, still there could be value in the stock at this price.
All right, Amit, we'll leave it there. Thank you very much for your time. Good speaking with you here on CNBC TV 18.